Today I'll be showing you how to analyze gold with your phone. So I have my lines all done on the chart, and this is my 4-hour time frame. I'll be starting at first, so I'll be taking off all the lines that have been done on this 4-hour chart. Now remember, when doing your analysis on gold or on any currency pair, you start from the higher time frame. It's very important you do your top-down analysis from the higher time frame, so you get a clear perspective of what the market is doing currently. Now, one thing I love about gold is it respects zones. So it not just it respects zones, and it respects market structure. So gold doesn't just move like that, it moves from zone to zone. If you know this, you'll be able to properly and correctly analyze the gold chart and be profitable in the long run. So now this is my 4-hour time frame. Now what we do when analyzing from a 4-hour time frame, we identify the current direction of the market. Now we have to zoom in and extend the chart a little. You'll see that the current direction of the market is still an uptrend. We know that gold is currently in an uptrend, so the market is still in an uptrend. So this is the current direction of gold on the higher time frame. So gold is still in an uptrend. And secondly, what we need to do is identify the area of interest. Where has market been reacting to, or where can we see more buyers and sellers before entering the market? So we plot our zones, which brings us to where we have to now plot our zones. We plot our zone. You see price reacted to this zone here before dropping. Then we have this zone here. We have this zone here where price is currently coming to. We have this zone here. Then we have this one here. We have this zone here where price reacted to before dropping. We have this zone here. So, and we also have this here. We have this zone here. So when analyzing the gold chart, you first of all identify the direction of the market, and secondly mark out your zones. Now these zones marked out on this 4-hour time frame will give us a better perspective of where to place our entry and exit on the lower time frame. Now I also have this zone here. I'm seeing something here. I have this zone here. I have this zone here. One, analyzing and plotting your zones on gold, pay attention to details. The little of it matters a lot. You don't ignore any detail on gold, because price react to mostly any zone. Price reacts to zones a lot. When it comes to gold, price react and respect zones a lot. So when you're analyzing on your chart, you need to pay attention to all of those zones and don't ignore it, so you don't get stopped out or taken out by the market. So now if you look at this area, this current market direction, current market move, what's happening now, we can see that the market was currently making a series of higher highs here. It gave us an uptrend, then broke out and started dropping. Now it broke out and started dropping and dropped down to this zone here, and it's been struggling to break it. So it's been reacting on this zone. So that's, you see, this is a strong zone. And we also saw how it reacted on this other zone here. This zone here, we've seen how it reacted there. gave us a fake out. That was more like stop loss hunt, and it still dropped back into that zone. Now, so this one here. Now, if I'm being asked why did I mark these zones? Now, when marking out your zones using market structure, you the previous high becomes the support level. That's to say this high that was taken out here becomes a support level. That was why the market came back to retest it. This high here, the price broke out from, it came to retest it. It's support. So after retesting, it broke out. Likewise here too. What happened is when price retested, this was the previous high, it broke out, came back to retest, but it didn't retest it fully. It didn't come into the zone fully before moving up. So if we are to enter this trade is already invalid because it didn't come into our zone, our area of interest. It was a bit above it. But if you have to now enter, if you scale down to a lower time frame, that's why we have our entry strategy for zones like this. But now focused on this particular aspect of the market. Now, after price broke out of this zone, this trend line, now you always pay attention because gold pay attention to details. Now price broke out of this trend line, dropped aggressively to this zone, and while moving up, it formed a channel. While moving out of the zone, it formed a channel. So what happened after forming this channel? It broke out of this channel. It broke out of this channel, broke out and dropped to our zone, dropped to a support level. So that's why I tell you that gold move from zone to zone. I need to pay attention to details when analyzing gold. All of the details, it matters. Now, if we were to enter this trade, how do we do it? Book out of this zone. Our first take profit point would have been at this second touch of the trend line. We would have taken a partial profit here if we were to enter. Then our second profit would have been here. Our first profit at the second touch, which is indicated with this black line here. So if I scale lower to 5 minutes time frame, we'll see how price reacted to how price moved from the breakout. See, price broke out, then came down here before moving all the way down to our second TP. Now, if I were to enter this trade, because it can't just enter this trade after the breakout, you need to wait for certain market conditions to be met before entering. Now, looking at this breakout, what then do I do? How do I enter this? I go back to look for an area of a previous low, or more like a support, where I know price might likely come back to retest. So I have something like this here. I have this low here when price book out. I have here. So I would have been expecting price to come and test this black line before dropping, but it didn't. Rather, what it did is start rejecting at this point, as forming a separate support level at this point. So looking at how price was reacting, so you see that price couldn't break above this point. It was reacting here and still trading below the trend line. So I would have still entered this trade and placed my stop loss inside of the trend line, this high here. I would have placed my stop loss inside of this trend line, then taking a short position from here entered my position from here, then held all the way to this point. Now, this was the movement of gold here. Then if I have to now come back, push the chart further to see what it did. Now you see how beautiful gold moves. It's an interesting pair. You need to actually pay attention to details. You need to really pay attention to details. Now, how would we have entered this trade? Because we have two things happening. Price actually broke out of this trend line, moved down to here, and rejected on this zone. Now, what I would have done is, since price broke out, I already know it's moving in a trend, which is a downtrend. So I would have done a trend line to get the move of this market. So as price moved all the way to our support level, and I have this trend line here. Yeah, I have this trend line. So I would have waited for price to break. So I would have entered this trade at the retest of this trend line. See how good moves at the retest of this trend line. But still, I would prefer to have entered this trade at the retest of this line, then held on to, like, to start looking for our take profit point should be at the various touch on the trend line where the market touched on the trend line, like where our candlestick touched. That's where we're using as our TP, take profit point. So I would have had one take profit here. Yes, I had one here. Then I have another here. I have this one here. And last but not the least, I have this here. I have this other one here. So see how price touched our various profit point. We had 3 TP, 1 TP, 2 TP, 3. So when analyzing gold, you have to pay attention to details, because gold pays attention to details a lot. And you making your analysis on it, you need to also be attentive and mark out and see what's happening. So now we have this move to the upside, then price reacting and moving. And when price go to this zone, the reason why sometimes we don't really focus more on the smaller time frame, like the 5 minutes, is so that we don't get trapped in, so we can see what's really happening, because the smaller time frame does not really hold much water. So the higher time frame gives us a better perspective. What we use the smaller time frame to do is to refine our entry, to see a better entry position, to see how we can enter the market as a sniper. So if we look at this point here, after the breakout and the touch, you see that price was rejecting at this point. We have this this rejection, this small move, but we can use a line instead. So we have this price here. So we have price acting like this here with this zone here at this zone. So we've seen how price was at this zone. So how it broke out, then came back, broke and dropped. So if we scale down to 5 minutes, we'll scale down to 5 minutes. Would have probably entered at the break of this line, but the move was to the candlestick was massive, so I'm sure we wouldn't have gotten an entry. But when this red line, the red candlestick came, tested, and gave us this pin, more like a pin bar, would have took an entry here, then this would have been a quick one because our TP would have been right at this touch. Yep, that's what would have taken, would have moved with this trade from there to here. Then after taking our TP, we'll watch to see what's happening, what price will react outside of the zone to know if we can further hold on, take if we can take a new position. So after price reacted, what happened? It came up here and dropped. But if we go to 1 hour, let's look at what 1 hour is telling us. So if we go to 1 hour, if we go to 1 hour, we can see, okay, this was what actually happened. If you have to go to 1 hour, so that's why I say you don't just focus on the smaller time frame. On the 1 hour, we have this here. We have this high. So, but market didn't test it. We didn't test that high before dropping. And if we look further, we'll see a series of rejection. We'll see this rejection, this candlestick rejection. If we look further, we'll see this candlestick rejection. So that's why I say take note of details. So for this reason, we now know why we have this rejection here, this fake out, stop loss hunt and the drop, because we already have a previous support and the resistance level, the resistance support. So price came back to retest that same zone. This zone is very important because we're seeing this rejection, a lot of rejections. So it tested it before dropping. So we pay attention to details, what's happening on what's really happening here. So I'll be taking out this my zone here and be working with what I have here now. So this is how price moved and reacted before dropping. So now next we'll be looking at is what will price do, what next. So we should be expecting, if price should break out of this zone, then we should be expecting a drop. Then our TP should be here. Our first take profit point will be here. That's where we'll be looking at. Then if price can get to this zone, then we'll wait for a full breakout and look for a next top profit point will be all the way down to this point. For now, this is what we're just looking at, fingers crossed, because price has already gotten to a support level. So wait for price to give us a better entry. But meanwhile, when analyzing gold, pay attention to details. Pay attention to details. Little of it matters. We have to look for areas where price reacted to that point of interest, then identify the direction of the market. If you want to do support and resistance, fine, then you will find your entry using your trend line. So you look for a breakout before entering. So guys, that's all for now. See you. Peace out.